All right, so I want to welcome everybody tonight to the property tax workshop, dealing with all these property tax appraisals that I'm sure you all have either received in the mail or have looked up online, and you didn't like what you saw, which is why you are here this evening. A little bit about myself first. My name is Craig Smizer. I am the owner of 1835 Realty. Been selling real estate since 1999. And it's what I do day in and day out. And if some of you know, probably make videos, mostly poking fun of the HOA, but other things as well. And so you might wonder, what are my qualifications to discuss this tonight? Well, for years, I think this is the 12th or 13th year that I have taught a workshop on how to protest your property tax appraisal. And this is a little bit different this year in what we're going to do. But really, this just stems from the fact that it's all about valuing property, which is really what I spend much of my time doing. And I have protested most every year. And so I know what I'm doing, know the ins and outs of it. So that's why I want to share all of that with you all tonight. But it is going to be a bit of a different workshop than we've done in the past. Usually I will talk through the actual process of protesting, how you do it from start to finish. But this year, if you have a homestead exemption in place giving you the 10% cap, then you really have no reason at all to protest, none. I mean, I can't think of an example that would make it worthwhile. Now, if you own investment property, that's a different story, and we're going to talk about that in due time. Or if you purchased last year. And so we're going to get to those things. In fact, there's about 7 topics that we're going to discuss tonight. And so I'm going to rattle through those, and then let's just get started. First, we're going to talk about how we ended up with these big increase in appraisals in the first place. Second, what, if anything, the discrepancies between the land and the improvement values mean. Third, the importance of the homestead exemption. Fourth, how and why to protest if you bought a house in 2021. Then we're going to talk about owning investment property that doesn't have a homestead exemption. Then we'll talk about how I think this is going to impact the overall real estate market in Central Texas. And finally, we're going to talk about what's going to actually happen with the tax bills when they come out later this year. There's quite a bit to mention on this topic. So as I mentioned before, I know not everyone was on board at the beginning. If you've got questions, please utilize the Q&A feature that is on here. I will most likely just wait until the end and roll through all the questions at that time. It just helps me kind of keep my flow and make sure we get to everything that I need to cover. I will stick around as long as it takes to make sure all the questions are answered. And if you are going to be protesting, then I'll probably tell you, let's chat one-on-one after, tomorrow perhaps, because we're not going to cover the nuts and bolts of that tonight, as I mentioned, just because the vast majority of the people are not going to need that. And this is going to take about an hour. Every year when I have done these in the past, that's what I've tried to keep them to. And then when we did this last week for the first time this year, we ran it right at an hour. All right, so let's just go ahead and dive in. I think it's pretty clear why the appraisals are so high this year. You've all heard and seen what the real estate market is doing. Here in Steiner, the median value of a resale home increased 41% last year. Now, that's not a uniform rate across the entire neighborhood. Some of the sub-neighborhoods might be a little higher, some a little bit lower, but it's a good overall measure of the health of our real estate market. Now, the role of the Travis Central Appraisal District is to provide a market value for every home in the county, pegging that value to January 1, 2022. Now, if you've heard me talk about TCAD in the past, you know I don't like the chief appraiser and I don't like the board of directors. Frankly, I think they're terrible. But I'm not going to get into that right now. If you care for my thoughts on that, you'll find them on my YouTube channel. But I say this because while I dislike the leaders over there, they are doing their job correctly when they jack up our appraisals, because that is what has happened in the real estate market. Now, I'm not going to rehash it all here, but in short, the supply and demand has simply skyrocketed the value of homes in Central Texas, and Steiner has been above average versus the rest of the area. So the fact that our appraisals have gone up so much is not surprising, nor is it unexpected. Now, of course, I deal with this every day, and I knew this was coming for quite a while, but not everyone deals with it every day. And a lot of people just haven't really given much thought about the taxing implications of it. So, that's kind of how we got here. And, that's just 2021. 2022, we are continuing on quite the tear on the market. When I compare to, last year at this time, our values right now are up about 20%. And so, it is continuing. But again, we're going to talk a little bit more about impacts on the market a little bit later. So on your appraisal, there are a few numbers to examine. And I actually haven't gotten mine in the mail yet. And so I'm not sure if they're using the same wording on the document you get in the mail as they're using online. This year, they've switched online systems. And so I see a little bit of a different terminology. I will mention that I often interchange the words appraisal and assessment. So when you hear me do that, I'm just talking about the same thing, the value that the county has assessed. So I'm going to do a little bit of a screen share here and pull up my property tax record. All right. So this is my property, and a couple of the numbers I want to point out. We've got this land home site, and you can see what they've valued mine at, and improvement home site. These two numbers add up to what first they call the market and then the appraised. And I'm going to refer to it as the appraised value. Okay. So those are the numbers that are important. And then we're going to get to this next section in a minute. But what I want to address is I've seen some talk on Facebook about these two different numbers, the land home site and the improvement home site. And you can see, let's look, this shows you what my values were last year and this year. And you can see that for me, my land value had a huge jump and my improvement had a little jump. All right. Now, when you talk to other people in Steiner or look at other records, you may find that the land value barely moved and the improvement value jumped up tremendously. So the question is why, and does it make a difference? And the answer is, I have no idea why, and I don't think it makes any difference at all. We are not the only ones that see this within our area, right? You can see this in Steiner, but I just pulled up Pflugerville and did some checking over there. Homes on the east side of 130, those homes, their land was really unchanged, and they had large increases in the improvements. If you go to the west side of 130, it was the opposite. But everybody's total value was up a lot. Okay, and so that's really the thing to keep in mind. Now, normally, if we're doing comparisons in a typical year, the land value does mean something, right? So they've always been wrong. I think that TCAT has a very poor concept of how to value the land. But it was often okay to compare lot values to each other. So I live in Summer Vista, which is a great example because I have one of the least valuable lots in the neighborhood. But we have lots that back to Lake Austin, some that back to Canyonland, and a lot of the interior lots, in fact, almost every interior lot backs to a greenbelt. So when you looked in the past at the values TCAT assigned, they were very similar and bore no resemblance to the value that the market actually gave them. And so that's one reason I was almost always successful with my protests, getting what I wanted when I would go in and protest in the past with TCAT. I would simply trot out this same map every year that would show the values of my lot compared to those who could see Lake Austin or the canyons, and they would agree with me. But they would never change the land value. They would always just adjust the improvement value. And I would ask them, and I never got a good reason other than that's just the way it's handled. So this year, when we see that change, that some are up a lot, and in the land and others in the improvement, that was a big question. People were like, well, hey, my lot's not worth that much. Well, I don't have a good answer to you other than to say, just look at the total. And this year, it really, I don't think makes much of a difference. Now, if I had to pick, which one is more correct, I'd say that the land value has increased more than the improvements over the last year. But I don't think protesting your value because your land went up compared to someone else is going to get you a victory if their improvement went up a lot and yours did not. So I hope you understand kind of what I'm talking there, what that difference is, and why I don't think it's really super important, this year. So let's move on to the exemptions. The most common is the homestead exemption. And this is for your primary residence only. You cannot put it on an investment property or a second home for that matter. There are two benefits to the homestead exemption. First, some of the taxing entities will reduce your assessed value. So by state law, all school districts must drop $25,000 off your appraisal before multiplying it by the tax rate. So if your property value or your property is valued at $800,000, LISD will tax you at $775. So I'm also going to mention right now that there is an amendment up for a vote on May 7. It's a statewide amendment. And this is to increase the homestead exemption for a school district from $25,000 to $40,000. There are people who are going to say it's a good thing, some who say it's a bad thing. I'm just going to tell you that's what you can vote on May 7th. So go ahead, take a look at it, do your research, and vote on that. If we look at other entities, Travis County, for example, 20% of your taxable value, they give you as an exemption. Same for the hospital district. Some taxing entities don't give any benefit for it. Okay, so that's the first component of having a homestead exemption. Now, the second benefit is the one I think that a lot of you have been hearing so much about lately, and that is the 10% cap. And right now, with our values appreciating as fast as they are, this is by far the most valuable of the two right now. So let's say you had the homestead on your property last year, okay? You bought your home prior, so let's say 2020 or earlier. Maybe you've been in it for just 2 or 3 years. Maybe you've been in it for 20 years, but you've had a homestead on your property. The increase for 2022 can be no more than 10%. So let me go ahead and do that screen share again. I'm just going to show this on my property. I've been in my property for a while. And so this is what you see here. This is the appraised value of my house. But because I have the homestead, they can only tax me 10% higher. In fact, I had it last year as well. So last year, they were able to tax me on $560. And if you take 10% of that, it's going to be $56,056. Add that on, and then you see what my appraised value is going to be for tax purposes this year. So I'm going to be taxed on $616,616. All right. So what this value is here, this value limitation adjustment, is the same thing that's over here. That's basically the difference between what they can tax me at and what my appraised value is. All right, so that's how the numbers show up on the website itself. Okay, so if we want to just use kind of a little bit easier numbers, right? Let's say it was 500 in 2021. It can't exceed. It's going to be at 550 this year. Next year would be at 605. Right? So it's certainly a large increase. There's no doubt about it, but it's much less than without it. Because again, as I mentioned, the median increase in Steiner for a resale home last year was 41%. Okay. Now, A side note on this is that if you've made any improvements to your house last year, that's excluded from the cap. I mean, I know I saw all kinds of pools going in last year, right? You got to get a permit for the pool. And so the county's going to know you put one in. Plus, not as aggressively as Williamson County, but Travis does look at satellite images and stuff like that. So for some reason you were doing a pool without a permit, at some point they're going to catch it. But anyway, if you put in any sort of improvement like a pool or an addition to your home, they can increase the value of your house by that amount and then take the 10%. So again, let's go back to the example of a $500,000 house. Let's say you put in a pool and TCAD values that at $100,000. Well, your 2022 value is $650. The 500 add the 10% cap puts you at $550, but then the full 100,000 is put on. So now you're at $650. All right, so that's how that works. Now, another big question that's been coming up about this homestead exemption is, well, hey, I bought my house last year and there was a homestead exemption already on it. And I have, made an application to put my homestead exemption on it this year. What happens? Well, unfortunately for you, while there was a homestead last year and there's a homestead this year, there was a break in the ownership. And that means that you're going to be brought up to a full assessed value because your 10% doesn't start until next year. That's just the way the law is, right? And so that's the situation that you are going to face with that. Now, I also want to bring up something that is new this year. There was a law passed last year. Paul Betancourt was the senator who championed this, which was basically to allow people to put a homestead exemption on the same year that they buy it. Because in the past, if you bought your house, you could not put the exemption on until the following year because it's a homestead declared on January 1. So you had to live in your house on January 1. So if you bought in July, you weren't living there, so you had to wait till the next year. That's the way it worked. Now it's a little bit different. But again, there's a lot of misinformation about that. So I want to touch base on it here because I don't know if anyone on this call has just purchased this year, but we're going to cover it. So if you buy at any point during 2022, you buy a house that does not have a homestead exemption on it, either because it's new construction, or maybe you bought a house that an investor had previously owned, or occasionally we'll find someone who just never put a homestead exemption on, even though they were entitled to it. So if you bought a house that does not have a homestead exemption on it, you can apply to put one on at any point during the year in which you buy it. And then it becomes prorated for you for the remainder of the year. All right, so that's a good thing. So if you bought this year, be sure to go ahead and do that. However, it's not going to help you next year with the 10%. I know you may say, hey, I'm putting it on this year. I get the 10% coverage rolling into 2023. That's not the way the law was written because, again, you've got to have it on January 1 for that 10% to start kicking in. So you can put it on this year, enjoy the first, the part one of the benefits where it drops off of your appraisal a certain amount before they multiply it by the tax rate. But the 10% cap, if you bought this year and put your homestead on this year, will not kick in until the 2024 tax year. Again, that's just the way it is. And I know you're going to hear about it differently from other people in other places. There's a lot of confusion about it. That's the way it is. I've talked to a couple of different appraisal districts, some title companies. I have read the law myself, although frankly, legalese is not my best subject. But you can go ahead and read it for yourself as well. And then a final thing on there, if there is a homestead exemption on, you don't get to put your homestead exemption on until next year. If you submit it to TCAD, they're going to say, hey, there's already one on there. We're rejecting yours. Okay, because the homestead, even though the owner sold it to you, the homestead stays on for the remainder of the year. So you get the benefit of the lowering of the assessed value, just not the 10%. All right. Now, there are a couple of other exemptions that I do want to mention. The 65 and older, cleverly named, and it's for people who are 65 and older. And this freezes the school portion at the dollar amount at which you qualify for the exemption. So let's say that you were paying LISD $8,000 when you turn 65. Well, you'll never pay more than $8,000 to LISD, regardless of the property valuation or the tax rate. If you're a disabled veteran, you should check out the exemptions available to you. If you're 100% disabled, you don't pay any tax. And then for various percentages of disability, you've got some other benefits. So I'm not going to go much further into those, but check them out if you were to qualify for any of those. All the information and how to apply is all on the Travis Central Appraisal District's website, which is traviscad.org. All right. So let me address the folks who bought a home in 2021. First of all, congratulations in being victorious in your cage match to buy a home. It really, was much of it that way last year. I get it. It was probably hard. You may have felt that it was overpriced what you were paying. But right now, whatever you paid looks like a pretty good bargain. But yes, your tax bill is huge. I hope your agent told you to expect it. Most of you purchased a home with a homestead exemption on it already. So again, that exemption stayed on through 2021 and you got that benefit. But it came off in 2022. So now you should get it implemented for yourself. But again, that change in homestead means you don't get the 10% cap this year. You'll get it next year. All right. So the good news is that if you have reason to protest, this year is easy for you. Of course, in the past, I would tell you to send TCAD a copy of your closing statement, and they would simply lower the appraisal to what you paid. However, with values increasing so much last year, they're doing it differently, and they're increasing the value that you paid, based on when you bought your house. Right? If you bought a house in January, you'll be paying, your appraisal is going to be a lot higher than what you paid for the house, simply because, as we just talked about, median value is up 41%, right? So you're going to need to determine if it's worth it to protest. And here's one thing you should know, that really what happens is they're going to look at what you paid, and they've got some formula. I don't know what the formula is. I just know that that's what I understand. They're working off a formula. Hey, you bought it in March, we're going to increase the value X%. You bought it in August, we're going to increase the value by X%, right? So it's a tough situation this year. I don't know what the formula is, so I can't help you out with that. But if you reach out to me privately, we're going to look at what you paid for the house, when you did, and what they're appraising you at. And then I'll give you some thoughts on whether I think it's worthwhile for you to send it in. If it really looks like it's in your favor, I would tell you not to, because I can tell you under the law, they can raise your appraisal. And have they done it? Yes. I've had people attend these workshops over the years that it has happened to them, that they would say, oh, I did that a couple of years ago and they raised my valuation, right? So you don't want to just do it just to see, will they lower it, because they can raise it. So let me go over it with you. Just like I said, we're going to do it offline because there's not a lot of people on here who are going to be protesting, doing an actual protest this year. We'll talk about it privately and go over it from there. Okay. So that's for people who bought in 2021. If you bought in 2022, I don't know if there's any of you on the call. We had one last time. Again, we will look at the same sort of thing. Look at what you paid for it and see if it's worthwhile. But if it had a homestead on it, even that 10% cap, if you bought this year, you get last year's benefit from them. So that is a good item there. All right, so let me move on to investment properties. So if you own an investment property, you cannot have a homestead exemption on it. So the good news is that your investment increased a boatload in value last year, which of course is the point in owning investment real estate, right? But unfortunately, you've got to pay property taxes on the full market value. So your taxes are going up. Now we're going to dive into how much they may go up more towards the end. But as far as the appraisal is concerned, for you, it's just like any other year. We need to look at it and decide if it's worthwhile to protest, either based on market value or the comparison method. I'll just briefly mention that. Of course, market value is where we look at the comps of what has sold and decide if they have assessed you fairly based on, if that is the right number. Setting that aside, there's a second method. It's called the fairness method. And that's irregardless of what the market value of your home is, when you compare to other homes around you, are you fairly appraised? So let's say the market value of your investment property is $500,000. And there's no beef about it, right? That's what they've assessed you at, and we know it's accurate. You got no shot lowering it from a market standpoint. But as you look around on the TCAD website and you start looking at other homes close by, you find that homes with similar lot characteristics and with similar sized homes, that TCAD has appraised them all at $450,000. Well, now you can protest, basically claiming fairness, that they have overassessed you compared to these other properties that are similar to yours without ever mentioning market value. So that's about as much as I'm going to say right now, because again, if you're an investor and you're looking at protesting, reach out to me offline and we're going to do that separately, walking you through that process. All right. All right. So how are these appraisals going to impact the overall market? I think it's a mixed bag. And so we're going to get into that as well as bring in some other factors. Now, in some cases, I think it's going to further restrict supply. And in other cases, it might give us more supply. So how's it going to increase supply? Well, we were just talking about investors, right? And so the obvious would be that an investor says, wow, I've seen quite a run up in my property. And now I've got to pay so much tax. I don't think I can get as much rent increase as I'm going to have property tax increase. And so maybe some investors decide it's time to cash out, right? So that would bring some more properties to the market, right? Now, on the flip side, if they do that, they're going to owe Uncle Sam some taxes. And so maybe some people don't want to have that tax bill incurred right now. Of course, they could sell them through a 1031 exchange and defer those taxes by purchasing other real estate investment property. But I think for this to be worthwhile, you probably have to buy in a different real estate market, right? It doesn't make a lot of sense just to change one home in Austin for another home in Austin, right? You're going to incur some transaction costs and really just apples to apples. So I think you would have to go to a different real estate market. Whether people are going to be willing to do that and want to do that, I don't know. That's an individual investor decision. But I think you're going to find a lot of investors with these fully appraised homes questioning, do I want to continue to be invested here in Austin, or do I want to keep, cash out, pay my taxes and enjoy the money? Who knows? But that's just one of the things that will factor into it. So what is something that might restrict the supply? Well, frankly, it's the protection of the Homestead Exemption. So let's say you own what is now a $1 million home in Steiner. And by the way, we are just about there as a median value in Steiner. We are just shy of $1 million as the median value for a home. So if you've lived in your house for a while, maybe your home that's now worth $1 million, maybe you're paying taxes on a $650,000 value because of that 10% cap. So if you decide you want to upsize or downsize, when you move, as we've talked about how this homestead breaks and you lose that cap protection for the 1 year, now you're going to be paying property taxes on market value, not your homestead exemption property value. Okay. So right now, it's going to take me several years, probably 4 or 5 years, and that excludes homes appreciating further before I get to that point where my home is paying, where I'm paying taxes on the full value of my home. So if you decide to sell and just go to another home, you're going to end up paying at market value. Now, there's a whole other side to it that's jumped into it, right? You probably have an interest rate around 3.5%, somewhere in there. Well, if you decided to move right now and you're not paying cash, you're looking at a 5.5% interest rate. So with higher interest rates and higher property taxes, I think we're going to see more people staying put. Obviously, there's always people who need to move, a new job, changing locations, a divorce situation, all of that stuff happens. But for a lot of people, they may look at wanting to move and decide, we're just going to stay put. And so that, I think, can reduce the already, low supply of homes that we have. Another aspect I'll throw into here, just to make it, deeper into a conversation that someone's going to have, is the $500,000 federal tax exemption that you can make on capital gains on your house. If that's for a married couple, if you're single, it's $250, and that's got to be like the biggest marriage penalty in the tax code. But anyway, that's, because I kind of had the thought, right? I have made $500,000 on my house. So anything above that, I'm going to have to pay taxes on. I was like, what if I moved? I could set that 500 back to zero. But there's just so many other transaction costs involved that I don't think it really makes it worthwhile. But again, when you're making this decision to buy or sell, those are all things that are likely going to pop in to your consideration. Now, all of that said, I expect that home prices will continue to rise in Steiner and across the Austin area, but at a slower pace than we've seen over the past 18 months. And even if you believe there's a recession coming, I still say that home prices are going to increase. In fact, in most recessions, home values increase. Now, obviously, the last recession was caused by housing, technically mortgages, but that was very different. But if you look at the past recessions behind that, in almost every one, home values increase. And when they went down, it was usually quite small, right? So as this area continues to create new high-paying jobs, most people that move here want to buy a home, right? They're not renters. And the builders simply can't satisfy that demand. So I think that Austin is going to weather this potential recession better than other areas. And I think that home values will increase. I mean, and that's one of the things too, right? Homes have always been a great hedge against inflation. And with inflation running 7.5, 8.5, whatever inflation we're at right now, again, homes are a great hedge against that. So I do think that home values will continue to increase. And I know it's hard for a lot of people to believe that, simply because we've had such a run up that everyone expects it has to come down. But I think really we're just going to see the rate of increase slow. That's my take on it. We'll find out, I guess, in a year or so if I was right. All right, let me check on the time. All right, we are doing okay. So that with the amount of time I've got left and then Q&A, we should be doing all right. All right, so let's move on to really what I think is really the reason that most of you are here. And that is, what are the property tax bills going to be when they come out at the fall, right? I mean, because you see your assessment, and the assessment in and of itself is not a huge deal, but it's what you say. You think, I see the assessment, what are my taxes going to be? All right, so let's start with the basics. There are two components that make up the amount of taxes that you pay. It's the appraised value after the exemptions. That's what we've been talking about so far tonight, multiplied by the tax rate. So at this point, all we have is half the equation. And until we know the tax rates, we don't know what our tax bill is going to be. Now, I'm not a big fan of politicians, and I think most of them would like to get their hands on as much of our money as they possibly can. So I believe a lot of them are licking their chops right now at what they see as a lot of new revenue for them. But There was some property tax reform enacted in 2019 that really is going to come into play big time. And depending on how much, of a policy wonk you are, or how much you like to follow the Texas legislature, you may have followed this closely or maybe not at all. When it was passed, there were, of course, supporters and detractors. Now, I'm not going to talk about whether it was a good bill or a bad bill that became law. I just want to talk about how it impacts us today. So the law is known as SB 2, short for Senate Bill 2. And essentially, it sets a maximum point at which property tax revenue can be raised without requiring voters to authorize the increase. And the key to what I just said is that it is based on revenue, not rates. So I know this can get complex, and really, I've just been honing my skills on it because when it passed in 2019, I understood the basics of it. I knew, what it was doing. But since it really has become a big deal this year, I've really taken a dive into it. In fact, I had a phone conversation with an attorney who specialized in this, and I'm going to be putting out a video. I was hoping this week, it might be next week, that deals specifically on this topic. So it's going to cover a lot of what we're talking about tonight, but it'll probably expand a little bit further. But anyway, so let's see if I can accurately explain this to you. So SB 2 limits the amount of revenue growth a taxing entity can have from one year to the next. So there are different categories that make it more complex, but in short, most entities are limited to a 3.5% growth each year. School districts have a different cap, and that's at 2.5%. We'll talk about that again a little later. So if they exceed that amount in their budget that they're calling for, as they set the rate, let's say, one of the entities is going to come out and say, oh, we're going to increase 6% this year. That means an election is automatically triggered, and the voters in that taxing entity would then have to vote to either approve or decline that increase. So if they were to vote for the increase, the rate can go as high as the voters want. I said 6%. Let's just say there's some entity out there that wanted to do a 24% increase in the property tax rate. That's going to go to the voters. If the voters approve it, well, now you've got your tax rate, okay, because the voters approved it. So now these percentages that we're talking about are based on existing properties, okay? We don't factor in new houses or new commercial buildings because that increase in tax revenue comes from the new taxable structures. So as part of an example, let's presume that Travis County raised $500 million through property tax revenue in 2021. That was across everything. And that would be a low number, but I'm just using an example of 500 million, okay? So if we speak in a simplified manner, then Travis County can only tax these same properties at a rate that's going to bring in revenue of $517.5 million in 2022, all right? So even if every property in Travis County had a homestead exemption, which they don't, because we got investment properties, we have commercial properties that don't qualify. But even if every property in Travis County had a homestead exemption, the tax rate would have to come down this year, presuming that the county commissioners didn't set a rate that would trigger an election, right? Because the tax base would have gone up 10%, which would have brought in $550 million, but by law, they can only bring in 517.5. Right? So therefore, the tax rate would have to come down. So I'm going to make the assumption that all of the leaders of these taxing entities in my examples don't want to go forcing a vote so that they're not going to go up. So let's just use that assumption. And I think what I'm talking about with that. So again, if Travis County to stay at the 517.5, that's going to require a lower tax rate. Now let's look at another example. The Steiner defined area of Water District 17, right? So most of Steiner pays this property tax. There's a small portion that doesn't. I'm not going to get into it. but Water District 17, most of us pay that property tax for the Steiner defined area. Well, what do they spend money on in that defined area? Well, it's pretty much just paying back bonds. We're not issuing new bonds because the infrastructure is already in place. We're just paying back these bonds. And we only have a certain amount that has to be paid back each year, and we know what that amount is. So the tax rate for the Steiner defined area of Water District 17 has steadily declined over the years. And I expect it's going to be a pretty decent reduction this year. But the biggest part of our tax bill, of course, is Leander ISD, right? And so, as I mentioned, the school districts have a 2.5% cap, but that's not the full story, right? The school tax rate is broken into two parts. M&O is one of them. INS is the other. So M&O is maintenance and operations. This is the part that pays teacher salaries, the administrator salaries, everybody's salaries, and what is really the day-to-day operations. That's the M&O. The other part is the INS, which is interest and sinking. And this is for debt that voters have approved. So, when we approve building schools, that's the budget for that. Okay, so they're the distinct sides, and they each have their own tax rate, but it is one combined rate that we see on our tax bill. All right. For our discussion, we care that the INS has no limit on the amount of increase it can have each year. That 2.5% does not apply to the INS. That is unlimited. It's based on what the voters have approved. And so the district must make those bond payments. So this 2.5%, that comes from the M&O side, right? Now, I haven't had a chance to research yet for LISD what the amounts were and how they, how the INS, which can change, how that's going to be impacted this year. My guess is it's not a big difference. Okay, so the school district subject to 2.5%. Things like the emergency services district, the fire station, the hospital district, they're all subject to the 3.5%. So what you're beginning to see is that unless the voters approve otherwise, the tax rates for all of these things are going to have to come down because they are not allowed to collect as much revenue if they just rolled over the tax rates. Okay, and in fact, they have that. You may hear, if you pay attention to this, as the next few months roll by, you're going to hear something called the no new revenue tax rate. And that's going to be, hey, if the revenue, and the state requires them to publish this, if the revenue was to remain the same, this is what the tax rate would be. And you're going to see those are going to be quite low. But anyway, so that's going to kind of unfold before us. And one of the things, again, I don't want to get too much into whether it's good or bad, but I will tell you some of the stuff that you're going to hear coming out of this. These places are going to be limited to either 2.5 or 3.5% increase in their budgets, essentially, at a time when we've got inflation running at 7.5, 8, 8.5%. So we're going to hear a lot about this coming up, I'm sure. There are other components to it that I don't want to get too much into here, which is that they can bank some of these. If they didn't use their full 3.5 this year, it can be banked until next year. But I think I'll save that for the video trying to explain this further, because I'm sure I've lost some of you by now. I don't want to get further into it. All right. So those are kind of, like I said, the main components. And I guess what I want to get through to you is that the tax rates from 2021, they're going to come down, right? Unless they all want to increase and all the voters increase, which I don't think there's probably much appetite for that this year, but who knows? So I believe the tax rates are going to come down. Now, what that actually means for the final tax bill, it's hard to say. They're going to be up. There's no doubt about it. They're going to be up, but it's not as much as some people may think. So that's kind of the whole spiel. And I did that in the exact time I was looking to do it, 45 minutes, because I want to leave time for questions. So again, you can use the Q&A or the chat. I am going to run through these just in the order they appear. Again, if you have particular questions, related to your property, I may defer you and we'll talk offline afterwards. Otherwise, I'm just going to kind of go through these and address them as we go through. All right. Let me get through here. All right. I bought my house in 2020, but only applied for the homestead exemption in 2021. Can I apply that retroactively or get money back from the taxes I paid last year? The answer is yes, absolutely. In fact, you can go back usually about 2 years, and they will put on that homestead exemption for you. So yeah, when you applied for the homestead exemption, let me see. I bought my house in 2020, only applied for the homestead exemption in 2021. Oh, I'm sorry. If you bought in 2020, 2021 was the first year you could put it on. You cannot go retroactive beyond that. The whole thing that you can do it in the year in which you buy your house, that's a brand new law that went into effect January 1 of 2022. So that's only starting this year. So for 2020, you are right on your timing, and that's the way it is. But I do want to mention, let's say that you've owned your home for a while and you never put a homestead on it. You can apply to put it on and retroactive 2 years behind. As long as you've lived in the house that long, they will do that. All right. Is the 10% cap something I have to apply for, or is it automatic if I already had a homestead and owned for 10 plus years? It's automatic. If you pull up yours, you'll see that those capped numbers in there. If you're having trouble reading it, again, contact me offline. Is there any procedure that can help control property tax increase on investment property? No, there isn't, other than protesting if it makes sense to protest. Usually everybody wants to protest because, hey, I don't like how high it is. But when we start to look at it and we see just the number, how the numbers work out, you're assessed fairly. But yeah, no, to answer your question, there is no mechanism in there for investment properties. Bought my house in 2015, have a homestead exemption all this time, put the house into a trust. Yes. All right. So let me just read the rest of it. I know where we're going. Let me read the rest for everybody else. They put the home into a trust in 2021. TCAD canceled the homestead exemption, claiming its new ownership. I have reapplied and hopefully will have it reinstated. My property appraisal is up 40% without the exemption. Is it worth protesting? Here's the good news. You will still have the 10% cap. It is technically a change in ownership, right? When you change it from you to the trust, the owner has changed. However, because you control the trust, they do view it as the same. You just have to reapply. And in fact, it's called a reinstatement. It's a little bit different. So it's a reinstatement. They will get that on, and it'll be as if it was never taken off in the first place, and you'll have the 10% coming in for this year. So just give them the time to get it taken care of, but you are good. That same sort of thing happens let's say it's a divorce situation and one spouse buys out the other. Ownership changes, but you can have that homestead put right back on as a reinstatement. Okay, so that's good news for you. Tax appraisal came in 20% below the sale price last year. Sounds like protesting would be a bad idea. That is correct. Do not protest it. If you want to send it to me, I'm happy to look at it, but I cannot imagine a scenario in which you want to share with Travis County how much you paid for the house. Purchased in 2021, August of 2021, the assessment more than doubled. Is it worth protesting just to hope that they bring it down? The assessment is more than I paid for it. Again, send it to me, shoot it privately in an email or Facebook message. It's craig@realestateinAustin.com. Find me on Facebook and just send me a message. I'll look at the numbers and tell you, but we just have to see how it is. My appraised value I received in the mail and the one that is online are different. That's unusual. Sharon, contact me offline. Let's take a look at it and see what's going on. Any particular companies you recommend to protest the assessment? There's a lot of them out there. All of them now are going to charge you a flat fee because they're really not going to make a whole lot, with so many people having the homestead exemption. Texas Pro Tax is a good one. And Five Stone is owned by a Steiner family. They've been around for a while as well. Does protesting usually work? Protesting works if you protest and have a good argument. Protesting for the sake of protesting doesn't work, but I'm a perfect example. I have always gotten my mine reduced because the numbers were in my favor. I mentioned earlier about how, my lot situation in my neighborhood, I'm on an inferior lot. So it's worked for me because it should have. I was overassessed. So, it works if you've got a good argument. All right. How much should we put aside for the extra tax surprise at the end of last year? The same as last year, I'm confused. Well, again, if you've got that 10% cap, if you put 10% extra aside, that'd be more than enough, because I don't think it's going to be that high because of the 3.5% cap. All right. But again, if you don't have that 10% cap, it's going to be different. All right, let me jump over to the other section where people have been putting questions in the chat. So let me pull this one up. What if you've owned your home for a decade, completely flaked out, and never applied for the homestead? I addressed this a little earlier, but I'll mention it again. You can go back and they'll probably put it on starting in 2020. When you go through your application, they'll ask you, what tax year are you applying for this? And they'll usually let you go back 2 years. So put 2020, heck, you can put the year you bought the house and see what they do. But the good news is they will retroactively put it on, and you're actually going to get, it'll take a few months because they're not real quick. It's got to go from central appraisal district to the county tax office, but they'll actually send you a check for some, because you overpaid based on that homestead. So that's the good news for you is, yes, they'll do that. Not all the way back, but at least you'll get something. You'll get that 10% cap. I have successfully protested back to sale value on the first assessment after purchase or my last 2 homes. Yes, that's perfectly fine. In the past, that's the way it worked. You would send it in and they would take it to the value of what you purchased. Not last year. Values went up so much they're not doing that anymore. Then getting the homestead after the first full year. Yeah, that's correct. That's how it works. But you get that 10% cap. There's a delay in that. Is there value in using protest firms versus doing it yourself? It depends on how good of an argument you have. If you've got a solid argument and you don't mind taking a couple hours out of your time to head over to TCAD and do it, then you'll save yourself the money. If you don't have a good argument, maybe they'll be able to use some resources a little better than you to get it down. But again, it's if you've got to have your property's got to be overassessed. If it's not overassessed, you're not going to have much success in getting it down. It depends on the value you put on. I think someone was trying to answer your question there. I bought an investment property in March 2022, and the assessed value is even higher than my contract price. Yes, then you should protest. If you just closed on it last month and they assessed you higher than you bought it at, yeah, go ahead and protest that because that's protestable and you should win that one. That one, they should definitely address that for you, okay? The new owners, a homestead, the question was, can the former owners move that homestead to their new property? Homestead exemptions don't move. Over 65 exemptions move, but homestead exemptions don't move. Once it's put on January 1 for that year, it is on for the entire year, regardless of what happens with ownership, okay? They cannot move it from one to the next. In fact, let's say, so they had a homestead on your house that you just bought. January 1, they lived there, they had that homestead. They went and bought a new construction home that had no homestead. Travis County's not going to let them put one on their new home because they had one on the other house. Can only have it on one, and they can't take it off the other. So Jeremy says, in his opinion, there's value to protesting, even if you have the 10% cap this year, because every dollar over 10% is a tax on future years. This is incorrect and is wrong. And so I don't want to mean to, I'm going to call you out, Jeremy, on what you're saying. TCAD does not look at your prior appraised value when they are setting market value in future years. The previous value only matters for the 10%. So this year, with values up 41%, you're not going to get that value down below that 10% cap. It's not going to happen. And so you are just wasting your time. So I know that there are a lot of people who have your opinion, and you can have it as an opinion, but as in terms of fact, it is not the case. Okay. Can you have a disabled veteran and a homestead at the same time? Absolutely. Yes, you can have multiple exemptions. Talking about the retroactive homestead, it'll automatically be taken care of that way. All right, let me run back to the other Q&A, see if there's anything there. What was the tax rate last year? For most homes in Steiner, it was about it was between like 2.35 and 2.36. I forget all the hundredths and thousands on the end there, but that's about where it was. Again, across Steiner, there are some different tax rates. The Grove, for example, is a little different. Bellagio Estate's a little bit different, but for the most part, around 2.35, 2.36. Any other way to protest an investment property? Carlos, I know I could see that you haven't opened the MLS stuff I sent you, so let's talk offline. I don't know if you just haven't had a chance to look at it or if the emails got stuck in spam, but you and I will talk about that one offline. Okay. So that's that. All right. I'm looking through. I don't see other questions here. Again, pull it right there. We did that right at about the 1 hour mark, but I will stick around and answer any questions. You can pop them into either the Q&A is really the better spot for me to see them over here. Happy to answer them for you. If you know of anyone who, would like this information, I'll be posting the recording or information on how to access the recording in the Facebook pages here pretty soon, and probably emailing them out as well. Of course, if any of you are thinking of selling based on these appraisals or for any other reason, happy to chat with you about that. Obviously that's what I do day to day. But that's it. Unless you have any questions, feel free to hop off or stick around to see if anyone has any questions that you think might be relevant to you. I'll stick around as long as we've got folks here. Yep, that's fine. Facebook Messenger is a great place to find me. Or by email, or give me a call tomorrow. I have a homestead exemption. My value has doubled. Even if I'm able to get an adjustment, is it worth the time with the 10% cap? No, because you would have to get it below the 10% cap in order for you to save any money. And that, that's just not going to happen this year with the values up over 40%. My email, craig@realestateinAustin.com. In fact, I'll just type it here. Probably easier. RealestateinAustin.com. It describes what I do. I sell real estate in Austin. Describes what and where, but it's a heck of a long email address. So. Right. Given the boom on assessed value and the cap on how much revenue the county collect, do I predict the tax rate will go down to less than 2%? I honestly have not looked enough at the numbers, the revenue numbers that they were bringing in, to know if it will go that low. I don't expect it to, because frankly, I expect Travis County is going to want their full 3.5%. I expect a lot of them are going to want as much as they can get. I think everybody's going to try to go as much as they want, except for like the water district, again, because the bonds. So I think that they're going to take it as much as they can, but then we're going to still see some reduction in the rates because of that cap. But I just don't know enough about it. This is really, we've had this law on the books for a couple of years. But this is the first time it's really going to come into play with any significant noticeable value. And so I just haven't looked at the numbers to see how far it'll go down. I'd be surprised if it went down. I mean, what would that be? That would be, 16, 17% reduction in the rate. I just don't know how the numbers will pan out. Any other questions? We've got a few folks left. Most have gotten off, but there's still some on here. So I will answer any questions that you've got. All right. Well, I appreciate you all hanging in and asking questions. But it looks like we are down to just a couple of you. So if you got any questions, just go ahead and post them. All right, there's one. Sorry, I see it now. I've seen other homes sold in January, February 21 got much lower appraisal values compared to my house bought in May with similar square foot. Can I protest using these homes with much lower assessment value? Well, again, it's going to depend upon all the characteristics, right? Square foot might be similar. Are there other things that would be different? Reach out to me and we'll take a look and be happy to give you my opinion on it. So either Facebook or email, call, anything like that will work. All right. Well, with just one of you left, I'm going to presume that if I give you a couple seconds to question, I will then go ahead and answer it. Otherwise, I'm going to guess maybe I put you to sleep, you wandered off, or something like that. All right. That's everybody. Hope you enjoyed the recording of this. If you have any questions, 512-650-7300. Email is craig@realestateinaustin.com. Have a good evening.